Just like that, Christmas is over, ending the week with the new year with pressure on interest rates. Now, before we go into the jobs data, let's talk about this ISM non-manufacturing PMI. I know it sounds scary, but it's really not. It's just 2/3 of our economy, right? It's only been the leg that's been holding us up with this manufacturing recession. But what it is essentially, think of it as a giant survey that goes out to healthcare and finance and tech sectors, and they say basically like, hey, how's your business doing? Are you getting new orders? What's your employment? Just the overall activity. So when it's over 50, it shows it's an expansionary mode. If it's less than 50, it shows a contraction. And the report that we got out for December, essentially, even though over 50, it was much lower than what the markets anticipated, and it was less than what we had in November. And it was much, much lower on the employment side of it. So that was actually positive for pricing. Remember, anything that is weak economic data, good for bond markets. Anything that's strong economic data puts pressure on interest rates, and that takes us into the jobs data that came out this week. Whether it was weekly jobless claims or the unemployment, you had the job cuts, much less than anticipated, payrolls increase. The biggest one was that monthly wages. It went up 15 cents. It's actually a really big beat, and that did get the bond market's attention. Now, the non-farm payrolls, even though it increased, you have to realize the Bureau of Labor Statistics, they make assumptions on these data points. So they can say, get this in, and they can essentially say, this is what we believe the jobs data is going to be. And that's where you're seeing some revisions in October and November, because as the real data comes in, they have to plug that in. So we'll pay attention to that revision moving forward. January will be important. But next week, it's all about inflationary data. We're going to get CPI and PPI, and we're going to get some confidence reports, whether it's with small business optimisms or even the consumer that we'll be paying attention to, which will be very key, because now the market's playing how many rate cuts are we really going to see in 2024. This is going to be the name of the game moving forward, whether it's 4, 1, 2, 3, time will tell. But in the meantime, rates are coming down. You be safe, and I'll talk to you soon.